You probably heard of the head and shoulders chart pattern and the double top or bottom chart pattern. What most people teach is to trade them when price breaks the neckline. Hey guys, that's the rookie way to trade, because by the time price breaks the neckline, the price has already moved quite a fair bit. That means that you will have a wider stop loss, a smaller profit target, and a lower risk to reward ratio. It doesn't sound too appealing, isn't it? In this video, I want to show you the pro way to trade chart patterns, and that is to trade it at the right shoulder or catch the second top or bottom. This way, you get in with a tight stop loss, and if the trade works out, you are going to get a very attractive risk to reward, assuming that you have the same profit target. By the way, if you're new to trading and are not too familiar with the chart patterns like the head and shoulders and double top, don't worry, because I will do a quick crash course for you as well. There's something in this video for everyone, regardless of whether you are an experienced trader or a newbie trader. There's going to be a lot of value packed in this video, so make sure to stick around till the end. Sounds good? So please hit that thumbs up button to support this channel and subscribe if this is your first time watching this video. We upload many valuable trading tutorial videos consistently, so you want to turn on a notification bell so that you won't miss out on any of our future videos. To encourage you to pay close attention, we also do a giveaway worth $37 for our plug and trade trading package. So if you wish to participate in our giveaway, then look for an emoji somewhere in this video. Once you find the emoji, comment on what the emoji is. You can also find the full instruction in the pinned comment down below. So let's do a quick refresher of the two main types of chart patterns that signify a reversal. We have the head and shoulders and the double top chart patterns when the price transitions from a bullish trend to a bearish trend. And of course, the opposite is true when the price is transitioning from a bearish trend to a bullish trend. For that, we have the inverted head and shoulders and the double bottom pattern. Now, ideally, these patterns are symmetrical because the market loves symmetry. So in the ideal scenario, the right shoulder will be symmetrical to the left shoulder, and the second top or bottom will be symmetrical to the first top or bottom. But please take note that this is not mandatory. Sometimes the actual right shoulder or second top or bottom may be higher or lower. But let me show you a few examples on the chart quickly before jumping into how to trade them. Right here we have a head and shoulders pattern. The left shoulder is here, the head is here, and the right shoulder is here. And over here we have an inverted head and shoulders pattern, and it's just the opposite. We have the left shoulder over here, the head over here, and the right shoulder here. Here's a double top pattern, and this is the first top, and here's the second. And finally, we have the double bottom pattern over here. This is the first bottom, and here's the second bottom. Pretty easy, isn't it? So let's move on to how to trade them. Typically, the rookie trader learns about these chart patterns online. And what do? They watch the neckline, and when the neckline is broken, they take the trade. Now, to be clear, there's nothing wrong with that. I sometimes use this as an entry trigger to enter into my trades, especially when I feel that the market isn't going to retrace. But as I mentioned at the start of this video, it is possible to trade at the right shoulder or second top or bottom. To do this, we are going to need to use a trend line. Now, please pay close attention, because I don't want you to start predicting the right shoulder or second top or bottom for every single chart pattern. If you do that, you will lose money, and that's not something I want for you. So we need to have a trend line confluence to find the highest probability setups. If you are new to trading and don't yet know how to draw a trend line accurately, then I will leave a link to a video that I previously uploaded at the top right corner and at the end screen of this video. But for now, let me walk you through how to trade at the right shoulder. Right here, we have the left shoulder and the head. Now let's assume that the right shoulder has not formed yet, because remember, we are interested in selling high at the right shoulder. So we draw a trend line and watch as price breaks it and retraces. Now in this case, the trend line forms up nicely and is symmetrical to the left shoulder. When we see this, look for a candlestick pattern to enter into the trade. Our stop loss goes above the head and will look something like this. Now this is the ideal setup and the highest probability one. Sometimes you will get setups where the price is retracing to the neckline, but it does not align with the left shoulder. That's totally fine as well. The bare minimum you need is for the price to break the trend line and retest it. The retest is how we catch the right shoulder. So let me show you another example, this time using an inverted head and shoulder as an example. I will go through the double top and bottom next, so keep watching. Again, let's assume that the right shoulder hasn't formed. So we have the left shoulder here and the head right here. We draw a descending trend line and we want the price to retrace back to the trend line after it is broken, kind of like a break and retest setup. Price retraces to it and we watch for a candlestick pattern. We get a bullish candlestick pattern and that's how we trade at the right shoulder. So hopefully this is clear, but do let me know in the comments if you have any doubts. Now I'm going to apply the same concept to the double top and bottom pattern. We are interested in trading at the second top or bottom rather than the right shoulder for these two patterns. Right here we have the first market top. So we draw an ascending trend line just like how we do to trade the head and shoulders pattern. Again, we are looking for price to retest the trend line. But here's an important pointer. We have to make sure that the trend line coincides with the first market top. Unlike the head and shoulders pattern, we do not need the trend line to coincide with the left shoulder, which is very important for the double top pattern. We have to make sure that the trend line aligns with the market top. If it doesn't, then this is no longer valid. Now in a head and shoulders pattern, it is not mandatory because your stop loss goes above or below the head, depending on whether you are selling or buying. Thus, it is okay because you still have the head acting as support and resistance. But in the case of a double top, the only level you have is the first top. Thus, the trend line must align with the first top. When we see that it aligns, then as usual, watch for a candlestick pattern. Once we see that, we can trade it and place our stop loss above the candlestick pattern with a buffer. It will look something like this. And that's how we trade at the second top rather than wait for the neckline to be broken. So let me walk you through how you will do this for a double bottom pattern. Now it's just the opposite, but I want to be thorough and make sure that you understand what to do. Here we have the first market bottom and the price starts to retrace. We draw the descending trend line like this and wait for the price to break and retest it. In this case, we can see that the descending trend line aligns with the first market bottom nicely. So this is a good setup and we wait for a bullish candlestick pattern at the level. Price eventually does that and we enter upon seeing the bullish candlestick pattern. The stop loss goes below the candlestick pattern low with a buffer, and that's how we catch the second bottom. So summing up this video, the way to trade at the right shoulder and at the second top or bottom is to use a trend line and look for a trend line confluence. In the case of a head and shoulders pattern or inverted head and shoulders pattern, we do not need the trend line to be symmetrical to the left shoulder. But in the case of a double top or bottom, the trend line must align with the first market top or bottom. This is a very important pointer, so please do not forget this. Remember that we need the trend line to do this, so please do not start trading every single chart pattern blindly without having the trend line drawn. Now, as promised, I will leave a link to the video on how to draw a trend line, and if you are not too sure how to do it correctly, please check out that video next, because this will not work if you draw the trend line wrongly. Thanks for watching. Don't forget to subscribe and hit that notification bell so you won't miss out on future videos. I will see you in the next one.